Hey everyone, welcome back to another video. As always, we'll begin by diving into what happened last week before looking ahead to the coming week, the week of July 27th, which is also the final trading week for the month of July. So last week, we saw SPX push to the downside, but not quite enough to hit the lower end of the expected move. While we saw chip and memory stocks sell off towards the end of the week, there were some other sectors like financials and some of the Mag 7 that were rallying, and it kind of kept SPX afloat and kept it from completely collapsing and hitting the lower end of the expected move. I also want to point out that SPX actually closed below the 50-day moving average for the second day in a row now. We actually gapped down below it on Thursday, where we gapped down almost 100 points. Um, and we stayed below it on Friday. We attempted to rally actually on both days here. We never actually quite made it to the 50-day moving average. Both times we kind of hit the midpoint of the expected move, and then just fell right back down. So yeah, 2 days in a row that we've been below the 50-day moving average. If you remember from a couple of weeks ago in one of the videos, I pointed out that we had this little breach for one quick day towards the end of June. But price obviously recovered back, and we actually almost made it back to new all-time highs off of this breach. But this time, obviously, things are a little different. We're seeing a second straight day close below the 50-day moving average. Um, at this point, I think we can probably assume that it's going to serve as some sort of resistance level, especially given the fact that twice on Thursday and Friday we attempted to rally and we didn't even get close. We'll have to see, right, how much momentum, maybe earnings or something can cause a rally. But for the time being, I'm going to assume that the 74, 72 level is going to serve as a resistance point. We're also seeing now over the last couple of days, the 50-day moving average is finally actually starting to flatten off. You can kind of see the curvature starting to flatten off, where we didn't really see that for a while. It was just a continuous uptrend on the 50-day moving average. So it's starting to flatten off a little bit. Last time we saw it flatten off was, late last year, early this year, and we know we had nearly a 10% correction off of the back of it. So I'm not saying that's what's going to happen this time, but just, just a little comparable to what happened the last time we saw the 50-day moving average kind of flatten off. I actually want to swap over to the NASDAQ real quick as well before we move on. We can see that the NASDAQ has completely broken down, and it's actually also broken the lows here from early June. And we know SPX is maybe still hanging around somewhere this level, but NASDAQ has completely broken down. I don't really track the expected move in NDX, but I think it's a fair assumption to make that we were well below the expected move for the week this past week. And we are nowhere near the 50-day moving average. I think we're about 1,400 points away. That's a pretty significant number. So we know NASDAQ has been the market leader to the upside during the spring, right? This entire rally, NASDAQ was going crazy. I think this was like a 30 something percent move in just, 7 or 8 weeks. And it was kind of bringing everything up with it. And I mean, this was good times for everybody, right? Everything was rallying. We had chip stocks, memory stocks, Mag 7. It was kind of an across the board rally. And now it kind of seems like things are starting to stall out. There's been a lot of choppy price action in NASDAQ, and the wheels are kind of seems like they're falling off, right? Some days you'll see, SanDisk, Micron rallying, but then Apple, Google, Microsoft, or whatever are negative, and then vice versa. So it's like some of the market leaders are rallying, some are not. I feel like the market caps are all messed up in the Nasdaq. So I guess the result of that is just instability, and we're starting to see a little bit of a trend starting to form here. There's still a lot of choppy price action, but I think the overall trend, I think most people would agree, is to the downside, especially now that we've broken this major level from June 9th. I think this candle was. Um, Now, if you pay attention to the chart, there really isn't much in terms of support between here and here. Now, I'm not saying that we're just going to completely come back to these, March or April levels, but this was a pretty straight line up. I guess an argument could be made that this like 26,500, 27,000 level maybe could be the next little support area. But honestly, just looking at this chart, there isn't really much between here and where we are. Now, like I said, I don't think we get back to these March lows unless something crazy happens. And I do think at some point dip buyers will step in, but right now I feel like it's a complete shot in the dark of where are these dip buyers going to step in. It seems like, even on Friday, we closed almost at the lows of the day. We do have a lot of big tech earnings this week. Most of the Mag 7 is coming out, so maybe that's the catalyst to slingshot us back up. But, just something to keep an eye out on as NASDAQ starts to break these major support levels. So if we really don't get a bounce from here, maybe we're headed towards the sub 27,000, maybe 26,500 level. So something to watch. All right, so looking ahead to next week, the week of July 27th, we can see that SPX has an expected move of about 145 points. This number has been trending up for about 3 straight weeks now. I think we were at an 88 point expected move maybe a couple of weeks ago. Last week was like 130 something, and now we are at 145 points for this week. So real quick, for those of you who are new here, the expected move is the one standard deviation expected move for the week using a calculation based on implied volatility and the at the money straddle. Basically, the options market makers put the highest probability for SPX to be within this range for this coming week's expiration, so for the Friday expiration. So now this week, the expected move is elevated for a few reasons. Obviously, right, we've seen NDX completely collapse down to lows from, these June lows. We've seen SPX starting to push lower as well, which kind of just naturally brings volatility into the market. However, this week we also have the largest earning weeks on the calendar for this quarter. I think a huge chunk, like 40% or something of the SPX is reporting this week, including 4 of the 7 Mag 7 stocks. On top of that, we also have FOMC on Wednesday. And it's also the kind of, the final trading week of the month. So a lot of new money expected to come in, etc. So there's a lot going on this week. Hence, that's the catalyst for the elevated expected move. So with so many things going on, so many things can also happen, right? I think a lot of different scenarios for this week. A lot of different things can happen as the earnings start rolling in towards the later half of the week, and then of course on Wednesday, like I said, FOMC. So a lot of big events, which means a lot of possible big moves. So breaking down the expected move here. So the upper end of the expected move, 75.57. I think last week we were in the 75.80s. So it's kind of hanging around that same level. This high from earlier in the month of July. And then the low, we can finally see the lower end of the expected move starting to push these June lows on SPX. We know NDX, as we looked at, already broke this level. But now the lower end of the expected move for this week, kind of puts SPX in this range. So if we were to get a larger than 1 standard deviation move to the downside, we could easily break these levels. So things are starting to get interesting, right? We're seeing 2 weeks in a row, maybe even 3 weeks in a row. The upper end of the expected move is kind of stuck in this mid 7,500, maybe 7,580 level, but the lower end of the expected move keeps getting lower and lower and lower. That's kind of starting to show that downside bias in the market. Um, if you actually look at the last couple of weeks, we had, lower low, lower high, and then another lower low. So does this trend continue? Is this a start of a bigger trend like we saw with NASDAQ, where some of the choppiness is starting to become more clear that it's a downtrend? We don't know that yet, right? We're also at a major support level in multiple different ways on SPX. So NDX is weighted heavily. Obviously, we know it's all tech stocks, but the market caps and everything is kind of all messed up. SPX is a little bit more balanced. Um, so that's kind of why we watch SPX, and that's kind of why it's still kind of hanging around and hasn't completely broken down, even though we're seeing, stocks like Micron, SanDisk, Intel even down, 40%, 30% on some of those, big chip stocks. So a lot to watch for this week. 145 points is pretty significant. So definitely expect some big moves throughout the week, especially, Wednesday, Thursday, Friday, as those big earnings start to roll in. Alrighty, and then a quick look at the VIX again, like we have been doing for the last few weeks. So last week, we know VIX closed outside of this 18 level. And this week, it mostly kind of continued to push higher. We actually breached the 20 level briefly on Thursday. So I think last week we were talking about VIX could possibly get back to this 2021 level. And we kind of started to tag these levels once again. So Still not a huge pop in the VIX, especially given that Nasdaq is actually lower than it was the last time VIX was here. So I think this was like that June 9th level that we're looking at on Nasdaq and SPX. This is where VIX was at last time, right around this 23 level. So Nasdaq is back there. SPX is maybe expected to get back there this week, but VIX is still subdued. Like I said, we did see a pop up, but it still just kind of feels like VIX is lagging behind. I think part of that could be because SPX is just kind of stuck in the middle. Um, we've seen days where the Dow is up a couple hundred points, the Nasdaq is down a couple hundred points, and then SPX is just kind of flat because it has a little bit of everything in there, right? So it's kind of stuck in the middle where the tech stocks are selling off, but maybe the financials or healthcare or something is rallying, and it's enough to kind of offset some of the downside movement in tech. So I think a big part of why VIX is kind of subdued is because of that push and pull in SPX. Um, Even on those big down days where SPX was down like 100 points, or the big up days where it's up 70, 80 points, the advanced decline line is roughly even, right? We're seeing half the index selling off, half the index rallying because of the market caps. It ends up pulling the index in one direction. So I think until we see like an across the board sell off where just everything is down, VIX might just kind of be a little tame, a little subdued. Um, but if price action accelerates to the downside, then maybe this 23 level can come back into play. But I think volatility will remain elevated this week just because it's FOMC, it's big tech earnings. I don't know if we get back to like this sub 17 level, but yeah, VIX is definitely still slowly and quietly rising, and I expect more of that this week. Okay, and then real quick, also the trade of the week. I guess we've been doing this weekly diagonal now for 3 or 4 weeks in a row on these videos, so just want to keep that going. Last week, I think this diagonal made just a little bit of money because SPX stayed within the expected move. We didn't breach at any point during the week, and by the end of the week, this trade made a little bit of money. So coming into the following week or this coming week. We see the diagonal sitting at around 285, which is a much more comfortable price. I think last week we were starting to push that $4 level, which I think I mentioned that I wasn't going to put the trade on, and I didn't. But this week, actually, even with the elevated move and the rising IV, we're actually at a pretty comfortable price for my risk tolerance. So we're looking at a 285 debit, and this covers the entire expected move. So if you remember from earlier in the week, or I'm sorry, earlier in the video, the expected move levels I think were 72.66 and 75.57. So the lower end break even point of this trade is 72.64, so just a couple of points off, and then 75.52 again, right there. So this diagonal covers the entire expected move, and if Apple, Amazon have good earnings, but Microsoft, Meta have bad earnings, and SPX ends up nowhere for the week, you walk away with almost $3,700 on a $285 risk for a one lot, right? Obviously, that scales up if you do more. So I think this week it actually might be worth doing. I skipped it last week, even though I talked about it in the video. But this week it actually kind of looks tempting if it kind of hovers around this 285. Maybe you can even get a fill around 250 if the market opens up a little bit lower on Monday morning. So I think this week it looks good. Again, not financial advice, right? Do your own due diligence and place trades based on your own risk tolerance. But I just wanted to throw this trade out there that this week it looks pretty good. I think it's a good shot in the dark. You risk, let's say $285 to possibly make 3,700 on a one lot. I think that's a risk that I would take every single week. So, last week it didn't make the max profit, but you still walked away with some money. But this coming week, who knows? I think it's still worth taking a shot. So, just wanted to throw that out there. Okay, and that does it for this week's video. Thanks again for tuning in and watching along. Hopefully you guys enjoyed the video once again. And yeah, good luck to you earnings traders this coming week. I think there's a lot of big tech names as we talked about, but also a lot of other big high flying stocks like Robinhood, SoFi, etc. So should be a fun week. Trying to make some money on earnings and see where SPX goes on the back of FOMC and the Mag 7. Thanks everybody. Good luck.